Hello traders, hello everyone, my name is Gregor and welcome to our new video analysis, this time for the FX markets. I'm actually in this old office. It's a little bit cold here, so that's why I have this jacket, so I'm sorry about that. So what I will cover, actually I will look at the euro dollar, also a quick look at Cadian and dollar versus Mexican peso. So euro dollar, firstly, we have seen a very nice recovery actually in the last few days, but notice that the recovery from the low from 108 is still only in 3 waves. So it looks like that market has seen a bounce based on buy the rumor, sell the news impact after Fed has raised the rates. As you know, speculators, traders, investors were positioned for this rate hike already for the last few months. So obviously we haven't seen any more of dollar strength because speculators already took advantage of this hike before the event. Okay, so what is really important to understand now is that there's still plenty of risk on the table for the euro in general, especially because of what's going on in Ukraine. So in my opinion, this is what will again be back in focus. Whenever you're looking at the euro dollar pair, this is something that you should consider, and just be aware that there could be more weakness. As I said, from a technical perspective, we had only 3 wave rise. We also stopped here at the previous lows here at from the end of January. So I see this as a very strong resistance at a 50% retracement. Of course, it can be a wave 4, so maybe this upcoming drop can be final leg of a higher degree structure. At the same time, I think that dollar index could approach 100 level. So I think that for now, dollar, yes, remains bullish, but versus the euro it can be a little bit different when you are looking at some of the commodity currencies, especially if US stock market is holding a support. Okay, so US stock market obviously is much more attractive now than the one from Europe because of what's going on obviously in Ukraine. So for now, euro dollar still, in my view, there is room for another low retest of the lows. As I said, also let's take a look on Cadian. Well, as you know, Bank of Japan is not looking for any kind of interest rates increase. In fact, they said that they will maintain current rate policy at the lowest levels. So this is something that we have keep in mind whenever we are looking at yen crosses. We are seeing dollar yen also breaking to the upside, but much more attractive can be yen crosses, especially if maybe dollar is going to hit resistance, as I said, versus commodity currencies. So I'm looking here at Cadian, very nice move out of this triangle pattern. So I'm looking for a 5th wave, meaning that we are in a final stages of a higher degree uptrend. So keep in mind that at some point, even if you see a strong breakout, there will be limited upside. Okay, at some point market will hit resistance, but that's why we are using fib levels to project where the market could go. Okay, and obviously the most important is the substructure of this 5th wave to know where the pattern is likely coming to an end. And good news is that I cannot count 5 waves up yet within this blue wave 5. Okay, so here I'm looking for end of a wave E of a triangle back at the end of February. So that was a flat or irregular formation, if you want, for a wave 2, and now you can see a very strong move, and usually this very strong move is 3rd wave. So 3rd wave should also be, even if it's fast, subdivided by 5 smaller waves. And in my opinion, this still could be in the middle of this ongoing strength. So I could label this as a wave 1. You had a wave 2, nice retest of this triangle swing highs here, or triangle line. Then you have a wave 3 now in progress, wave 4, wave 5. So I think that there can be more upside coming. There was also retail sales, very strong numbers came out. So I think with Bank of Japan dovish outlook, I think that this Cadian could obviously stay in uptrend. So watch out for more upside. As I said, based on projections, well, the first projection here is actually here around 95.50, but the second projection, and more technically correct, would be if you take the distance of the widest leg here within a triangle, which was wave B because it was a running triangle. So I took this distance and I measured it from the end of a wave E. The next, if the market just will keep ripping higher, the next leg or projection that we could look for is from a measured this triangle from a breakout point. Okay, that means from 92 level. In such case, you can see that I came out with the targets around 100. So that's still far away. Let's go step by step, meaning more upside after pullbacks. And I think that these pullbacks could be very attractive for potential new longs. Of course, when this pullback occurs. At the same time, keep an eye on 92.58 level. If this level is overlapped, then at the same time, we would already be below this peak from end of October from last year highs, meaning that in such case I would probably be looking for a top or something else. Okay, so as long as we are above 92.60, I think that buying pullbacks makes sense here. Also let's take a look on dollar Mexican peso. Now this one is quite interesting. I've been talking about this pair for the last week and been repeating that what is very interesting is that dollar was very strong versus a lot of commodity currencies, let's say last week, maybe week back, but dollar Mexican peso stopped at this very nice 61.8% resistance. Okay, so we have seen a nice drop here on dollar Mexican peso. It was nice move. I think it came after the CPI from Mexico came out stronger than expected. But more importantly, after this news, there was still dollar moving higher versus other currencies. But dollar Mexican peso was just consolidating here at these lows after the first drop. Okay, and what happened later is that when dollar hit resistance versus other commodity currencies, like we have seen over the last few days, Aussie is turning higher, for example, well, this market obviously is now even accelerating to the downside, okay, because dollar weakness is also helping now dollar Mexican peso to see move lower. What is really important is the next week we have a rate decision from Bank of Mexico, and if they will be hawkish after latest their strong CPI figures, of course, we could very easily see this pair going back towards 20. And if we look back around 20, there could be a very massive breakout point, especially if we consider that this recovery from January of 2021 lows has been made by 3 waves. Okay, and this is a very nice reversal from that resistance here from 22 and another 3-wave rise. And now, as you can see, we already broken this trend line. We are just accelerating. So I think that any rallies again could be limited, potentially part of this downtrend. So this could be very interesting move to the downside. Acceleration is possible, but for really something big to the downside, you obviously need to see a strong stock market as well. You want to see a risk on move to become even stronger. So watch out the stock market. I'm still not sure if the if the S&P 500 has really bottomed here or it will just keep consolidating. Yes, I think it's a correction from the start of the year, but I'm not really convinced if that's it. Okay, so we will have more. We will need more price data to make sure where we are at this stage. But as I said, regarding the risk on play, I think the dollar Mexican peso weakness could be a very interesting one. As long as the S&P 500 will keep consolidating, I think that euro dollar, because of what's going on in Europe, in Ukraine in particular, will see more weakness. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Please give it a like if you want to become our member. Also, we have coupon code trial for new members, so check this out and you will get a discount, a big discount for the first month. Okay, traders, thank you very much and enjoy your weekend. Bye.